Speaking of those jobs numbers, the economy added a robust 119,000 new jobs in September. And one thing to keep in mind, these jobs are going to United States born citizens, not foreigners anymore.
This is the September jobs report. Non-farm payrolls are up a robust 119,000. 119,000 would be the best since April when we were up 158,000. If we look at labor force participation rate, it ticked up. That's a good thing. 62.4 equals where we were in May. You have to go to April of this year when it was 62.6 to find a higher number. If we look at the hours worked, and this is always important, it remains at 34.2. To find a lower number, you're going to January when it was 34.1. We have initial jobless claims. This is for the week of November 15th. As I said, there's weeks missing. We're expecting 227,000, comes in at 220,000. These numbers do not reflect nervousness in the labor market. They've been very well behaved. 220,000 would be the lowest level of claims since mid-July.
So that leaves people speculating, why is XRP crashing? Why is Bitcoin crashing? Why is the S&P 500 crashing? And why is the NASDAQ and on and on? Now, the interesting thing is here, these are pullbacks. We don't necessarily need to say crashing. People are freaking out because they hold a lot of these things right now. As far as indices, cryptos, and so on, it is very scary if you're holding this portfolio and you didn't sell at the top, because the top was just a couple of days ago, October 6th, when the guy from 4chan predicted that exactly on October 6th, the all-time high for Bitcoin was going to hit. And sure enough, it did. And everyone thought that was fake. It was predicted back in 2023. On December 12th, 2023, he put out the previous all-time high. If that pattern were to continue, all-time high would be on the 6th of October, 2025. People want to believe otherwise, but the simulation will repeat itself. Again, this comes from December 12th, 2023. And if we take a look at Bitcoin and we go back to October 6th, which is literally the last green candle before the down move, that's got a lot of people spooked. Is the bull market over? Well, we are coming into a phenomenal support, and we'll get into the actual charts here in just a couple of minutes. But people are worried. We're getting good jobs numbers, etc. But the reality is the government just opened. So these reports are just getting cranked back up again. The flywheel needs to start moving. The big giant snowball needs to start rolling down the hill, and then we will get some more positive information coming out. But we do have some positive news for XRP, maybe not in the price necessarily. However, Brad Garlinghouse posting the pre-Thanksgiving rush, shall we say, turkey trot for XRP ETFs start now. Congrats to Bitwise Invest on today's launch. Milestone day for XRP community. This morning, the Bitwise XRP ETF began trading on the New York Stock Exchange. With today's launch, investors have a new convenient way to get spot exposure to XRP, the crypto asset looking to disrupt the $250 trillion market of global payments. So with that, as we talked about in the intro, Bitwise launched their XRP ETF with a 0.34% fee. So not super heavy, and that's waived for the first month. It traded over 610,000 XRP worth $14 million on day one. Analysts predict that inflows from 12 spot ETFs could create a weekly demand of 1.14 billion XRP, potentially consuming the entire public supply within a year if the prices stay stable. That is phenomenal. We could finally see that supply shortage of XRP that everyone's talking about. XRP's trading volume dropped, though, 32% to 4.64 billion, with a 2.97% price decline to $2.11. Now currently sitting at $2. We'll get into that in the markets, marking a 12.21% fall over the past week. And Tom Lee is saying that this is all because of that massive liquidation. Now, if we go back and we look at the charts, we'll look at XRP's chart because it has one of the most gnarly, ridiculous liquidation candles here. As we see right here, this is the October 10th candle he's talking about. This day that happened, a lot of people speculated that Wintermute, which is one of the largest market makers in the entire world, may have potentially got liquidated themselves. They may have run out of money. And because of that, no one is able to provide liquidity for the entire markets, and prices have continued to bleed off over time. And if we take a look at this one, for example, the XRP perpetual contract, this is the trading with leverage. For those of you guys that know about trading with leverage, some of you do, some of you don't. By the way, there is a link down in the description to where you can get started for doing perpetual trading without having to use your own money. We have a promo code 777 to get you the best possible discount. But look at this liquidation candle here. This one came down to $1.17, which is one of the lowest that I've seen. And if we take a look at Bitstamp, a different exchange, their long liquidation curve down here was $1.58. So every single exchange had different liquidation levels because of the fact that market makers all got caught off guard as well on this significant drop.
Was the point that my very, very smart team behind me, we put together for the top of the show, which was showing that Bitcoin turned down today before the market did. All right, take us back. So October 6th, I think it was October 6th or 7th, Bitcoin hit 125,000. Yeah, a couple days later, it was still around 120,000. Now, obviously, Bitcoin's at 86 and change. So what specifically occurred on or around October 10th that would lead us to where we are now on what, November 20th?
Yeah. Well, Steve actually pointed this out. There's a lot of what they call automated processes in crypto. One of them is called ADL, okay, and that's an automatic liquidation feature that would take place if someone's account or their collateral drops in price. It's essentially like a margin call. On a specific exchange, a stablecoin's price varied from other exchanges. It actually, stablecoin should stay at $1. It dropped to 65 cents. But that only happened within the exchange quotes, within this exchange because of liquidity. That triggered an ADL, an automatic liquidation across many accounts. It wiped out, as that spread across other exchanges, right? Because liquidations cascade, almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
So who is behind this? Like, who's the they in the market makers and they got hit? Who's the they?
Well, Brian, I am aware of names, but because I'm not someone who wants to name names. I think what you should keep in mind is that this error is actually essentially a bug, a code error, because I think in retrospect, they would have pulled pricing from across exchanges to set the price for that stablecoin rather than rely on internal quotes. But this has resulted in a lot of market makers and traders having less capital. And as you know, as crypto prices drift lower because trading volumes drop, they need to then have more capital available, which means they shrink their balance sheet further. So this is then that reflexive weakening.
I want to go back to this point, Tom. I hate the term glitch. I can't stand the term glitch because, things go down at the airport and they say, well, a glitch clause, your flight did not take off. That's not a glitch. That's more than a glitch. It's a word that is used to describe pretty serious automation issues, software problems, crashes, for some reason that they try to minimize. Is this some kind of a software bug that's causing part of this? I'm trying to follow exactly what you're hinting around about.
Brian, it is. For instance, in 1987, portfolio insurance was the quote glitch, and that triggered the cascade in 1987. And so the industry learned and then never offered that again. In 2009, it was really the collateral wasn't secure in real estate and these packaged subprime mortgages. Now, the industry learned and they recoded that. I'm talking about Wall Street, but then regulators came in and overregulated. That was the negative effect of that. In crypto, this code of ADL and the way they pull prices is never going to happen again. The good news is we're not going to have overregulation in crypto, but now we have to deal with that liquidation effect. 2022 was a big liquidation, and it took 8 weeks. But that is kind of, you're right. It is the nature of DeFi where there is going to be code and there's going to be an error found. And you said it, leverage is what's dangerous. And so investors should not be using excess leverage